Today, let's talk about a little known company by the name of Apple. I think we all know the business, quite popular. A lot of people have their iPhones, MacBooks. I myself am actually recording this on a MacBook and have an iPhone. But the thing we look at is Apple a buy, sell, or hold in terms of its stock. When we look at it, I kind of want to talk about the overall economy first, but we do know that Apple reported earnings yesterday. But as I said, I do want to talk about the economy before I hit Apple. Reason for that is today the jobs report came out. It just blew past expectations. We continue to say the labor market is very strong. I think we could see a recession this year, but I don't think it's going to be anything that's going to be terrible. And I think a lot of people are baking in something much worse, which has kind of pressured the 10-year treasury, pressured interest rates. People think the Fed's going to cool off and reduce rates by the end of the year. I'm not in that camp. I think that the 10-year note has gotten too low. And the 10-year note did rise today after the jobs market beat, but I think it is still too low, and I would not be surprised to continue to see it rise as we progress through the year. The reason this is so important with a company like Apple, the other big tech stocks, is we've seen kind of what I call a negative correlation. As interest rates go up, well, it seems like a tech stock struggled. As the interest rate has come down, it seems like the NASDAQ, and in particular a lot of big tech stocks, have kind of rallied. So if my thesis is right here and we continue to see the 10-year note rise throughout the rest of the year and interest rates go up, I'd be very careful of a lot of these big tech stocks. The other reason talking about Apple, I'm going to talk about their earnings report here at the end. I want to talk about first kind of the fundamentals that we're looking at with this business before we kind of rate it to buy, sell, or hold. Kind of take you through our process of what we look at when we are buying a business. We're going to start with, again, a lot of the fundamentals we look at when we are analyzing a business for a company like Apple or any stock that we buy. So what we look at here first, we know Apple, consumer electronics business. We look at the short position, not surprised to see this 0.8% in terms of the short position. Not a lot of people out there shorting Apple stock. Looking at the valuation, this is where a lot of concern starts to kind of stem in when I'm looking at Apple. Current price to earnings multiple 26.2 versus an expensive industry average of 25.7. Price to sales at 6.5, also above the industry average of 4. Price to book value 43, what you're paying for the accounting value of the company, well above the industry average of 12.6. Price to cash flow as well, 22.9 above, and also expensive industry average at 22.5. See the PEG ratio, which is your PE divided by growth, is 2.8. That looks attractive, but I'd be very curious to see as more analysts come in here, where is that growth going to come from? I personally think that growth estimate is too high, and I think that PEG ratio looks more favorable than what I think it will be in reality. Looking at the earnings growth, this is not for the numbers as of yesterday, but beforehand. You see the earnings per share 1 year up just 1.3%, very limited growth on that, and then sales were up just 4.2%. Again, not great growth for that last quarter, and also we know for yesterday's report as well. Looking at the dividend for Apple, you see the dividend yield is 0.6%. Get a small dividend, say the least. That's nothing to really write home about. You see their payout ratio 14.6%. They have the cash flow to increase that dividend, but I still don't think it'll be anything really meaningful in terms of an investment standpoint. Looking at the buyback yield, you see they have bought back a good amount of stock, just 3.7% of those shares outstanding there. So one thing to point out is that does help the earnings per share. That means their income has actually struggled even more so because there's less shares outstanding. That helps enhance the EPS. So that's even more of a disappointment, I would say, in terms of that earnings per share growth. Looking at the balance sheet for Apple, kind of surprised by this. Years ago, held Apple, they had a very strong balance sheet. Doesn't appear to be the case any longer. Current ratio here, 0.9, not a ton of liquidity there. And also the debt to equity, 240%. That is very, very high. Very curious as to why that is. I know they've bought back a lot of stock, which does kind of change that ratio quite a bit, as your debt level could perhaps be increasing or maintaining itself, but your equity is getting reduced as you buy back stock. I'd want to look at that number a lot closer, as it's not as clean as it used to be. Looking at the net margin for the company, 25.3%. That's one thing we know Apple does a great job of, is being very profitable. Looking at the current price here for Apple, $154.50. 52-week high is $179.61. You see the low here, $124.13. So year to date, up about 18.9%. Done very well to start the year. Over the last year, though, still down 11.6%. We know Apple's a huge company at about $2.4, $2.5 trillion. Now what we do is we go forward looking at September 2024. So the estimated earnings per share here, $6.63, gives us a forward PE of 22.74. We know the long-term average about 16.6 to 16.8 times future earnings. That's what we sell out at our firm when we're selling a business. 22.7, that is very, very expensive, especially for a company. Look at this. The earnings are expected to decline this year and then increase just 9%, 10% next year. Looking at a 2-year growth rate, that's not very exciting, especially when you're trading at 22.7 times future earnings. That's very expensive. Generally, the higher the multiple you have, the better the expected sales earnings growth is going to be. Doesn't appear to be the case for Apple. Also, too, I want to talk about that quarter that they just have. Gosh, I'm going to say here for Apple, I think it was a horrendous quarter. I heard people say, oh, it wasn't bad as expected. But a lot of these expectations were already baked in by many analysts, and they still missed. I mean, you look at the earnings per share, $1.88 versus $1.94 estimate, down 10.9% year over year. Revenue missed, down 5.5% year over year. It was the first decline in revenue Apple's seen since 2019. Tell you what, since 2019, that PE multiple has expanded quite a bit. Also, too, iPhone revenue, that was down 8% year over year. Mac revenue was down about 29% year over year, also missed expectations. iPad did beat the revenue expectations. They're up 29.6 year over year, but it is a small part of the business. Other products down 8.3% year over year. That also missed. Service revenue barely beat. But look at this, it's just up 6.4% year over year. That used to be Apple's, I'm going to say, gold star. That's what everybody was kind of hanging on to. Apple was growing, in the high double digits, I would say 10, 20% range for several years on that service revenue. That has now declined. And to get that 6% year over year growth rate in services, that is not the shining star that it used to be. I got to say here on Apple, I just don't know where the next act of growth is going to come from for this business. And as I said, to trade at these expensive multiples, you got to be able to justify that high multiple. I myself, I still have the iPhone 8. I haven't seen any reason to get one of the new iPhones because I can't really tell the difference for how I utilize it. I don't think there's going to be much more advancement for that company going forward. I know there's a lot of people that still love their products and will buy them, but I don't see how they're going to continue to be able to grow that iPhone revenue in particular, which is still, gosh, I think about half their business, at a nice rate to have that good overall sales growth and earnings growth. I got to say here, Apple, I'd rate it a sell. I know people have done well on it. I know people love it, but it's expensive. I don't see how they can get much more multiple expansion, which would need to happen without that earnings and sales growth. Not impressed by Apple's quarter. Not impressed with the stock. As I said, I get out of it. Congrats on doing well. Don't be hanging around waiting for the next act.